right? So in this series I'll be showing you how to generate a directional bias, how to generate a directional bias, especially how to generate a daily directional bias as a CRT trader. And I'll also be diving in how to mark out key levels, because I realize that most CRT traders don't know how to mark out key levels. Now mind you, these are the two topic I'm going to be dissecting today. Every other question that should come in regarding only this topic. In the next sequence I'll be explaining key time, SMT, etc. and etc. And I'm going to be breaking it down to a very, very simplified context so that everybody will be able to do it. Get it? If you're going to be a very successful CRT trader, not just successful CRT trader, if you're going to be a very successful trader, one of the things that you're going to pay attention to is what? Making sure you solve your issue relating to direction. Sight is everything in the market. Sight is everything in the market. Your strategy can be top notch, but if you don't have if you trade into the wrong direction, you're going to get wrecked every single time. Your strategy can be 100% win rate, that's if such exists. Your strategy can be 2,000,000% win rate. As long as you don't have sight, you have issue with directional bias, you are always going to get wrecked unfailingly. First thing is first, there's a relationship between candles. Candlestick has relationship from candle A to candle B. There's an interrelationship between candles. So how candle A closes, open and closes, will determine how candle B will react. Okay, how candle B reacts is going to determine how candle C will react. In this time, this is what I'm trying to talk about. So let's say this here is candle A, and right, candle A closed below this region. This is where candle A closed, if I'm not mistaken. Excuse me. Yeah, so this is where candle A closed, right here, right? And yeah, candle A made a low right there and closed right above it, right? So the lows and the highs are your guide. The lows and the highs are what? Your guide. So this is the low of candle A precisely. Yeah, so that's the low of candle A now, and that's the high of candle A. Now because candle A had this high right here, I'm going to label it so that it's going to stick. So just pay attention, don't be in a haste, you're going to get it. And that's the low, right? So that's the low. Okay, let me make it like this. So that's the low of candle A, and that's the high of candle A. Now the highs and the lows of every single candle, what it does matters a lot, you know. So candle B, we're going to watch how candle B is going to react to candle A, and you already know what happened right here. So candle B came right here, took out the low, right? Took out the low of candle A and did not close below the low of candle A. Does that make sense? So because it did not close below of candle A, the probability of this candle going lower becomes slimmer. Why? Because the volume of candle B closed way above. It wicked out candle A and closed above. So because it closed above, you're going to have possibilities of what? Higher price. Is basic. You're going to have possibilities of what? Higher price. Understanding this simple candlestick anatomy is going to help you do what? Trade in a longer. It's going to help you trade in a direction, you know, for a long run, especially when you do what? Get it from the what? Bigger time frame. Now right here, this Ethereum USDT, and we're on a monthly time frame. So seeing how April closed above March, right? Seeing that the candle B, which is April, closed above the low of candle what? March, is giving us an indication that what? May is going to do what? Likely push all the way higher, right? And that's exactly what happened there. So candle C did what? Pushed all the way higher. This is the core basic, the core context of what? Understanding candlestick anatomy. How a candle closes and opens matters a lot. The highs and the lows of the candle matters a lot. They are always what? Your guide. So Let's take one more example before we dive in. Now this is candle A right here, right? So this is candle A, and candle A did what? Candle A closed right what? Candle B rather closed below candle A high. So below the high of candle A, candle B did what? Closed below it. If candle B had done what? Had closed above it, we're going to have possibilities of what? A higher price. So you're going to abolish your context for what's trying to look for what? A lower price. You're going to have what? A higher price. But because candle B closed below it, you're going to have what? A lower price. And that's exactly what happened right here. Candle C did what? Deliver the what? A lower price all the way down to the low of candle A. So the highs and the low is simply your guide. Now, how do you solve directional bias, daily directional bias? When you come to how the monthly candle did what? Opens and close, how the monthly candle reacts off of highs and low is going to give you a template, an example of how the weekly candle is going to react, right? And how the weekly candle reacts is going to give you an example of how the daily candle is going to react. And how the daily reacts is going to give you an example of how the 4 hours candle is going to do what? React, etc. and etc. The sequence goes on and on. So, but simply in this video, we're trying to focus on what? Directional bias. Now, in focusing on this directional bias, how the daily candle does what? Closes matters a lot. Now, we're going to start from here because I've been screaming since last week that there's going to be a tiny crash in the crypto market. It's all over my timeline. So I've been screaming since then that there's going to be what? A tiny crash, and it started from here. It started right about here. Now this is candle A. Remember the sequence. Candle B closed what? Below candle A, and this is the low of candle B. What do we expect? We saw that the following candle, because candle B did what? Closed below candle A, candle C is supposed to do what? Tank way lower, and that's exactly what happened right there. Does it make sense? Now this is candle C low, and this is the high what? Of candle C. Now marking the low of candle C, we saw that what? Candle D, which is this one, candle D did what? Closed below candle C. So what do? We expect more lower price, right? So now candle D closed below candle E, closed below candle E right here. We still did what? Indicate what? Lower price. And that's exactly what has been happening sequentially. Now this preceding candle right here, this little choppy range that happened right here, is just a minor pullback, which you can almost instantly interpret it. Right about here, you have this candle wicked out the high. Let me zoom it in a little. You have it wick out what? The high of this previous candle, which gives you what? An indication that what? The preceding candle is also gonna do what? Also gonna make a low. Is also gonna tank. It needs to tank. Why? Because it didn't close right above it. Now right here, I think there was an SMT. I don't really want to explain SMT in context, but there's an SMT between Ethereum and BTC right about here, because you're going to say this. Pay attention. Now when marking the highs and low of the candle, you need to pay attention to your liquidity providers, because you're going to notice that in FXCM, maybe the candle closed above, just this tiny example right here. You're going to notice, okay, maybe the candle did what? Closed above the high of the previous candle, while in Oanda you're going to realize, okay, maybe it wicked it below. So you're going to pay attention to the right what? The right server. Okay, so right about here, the candle did what? Wicked the high of the previous candle, which indicates what? Lower price. Okay, and that's exactly what happened there. What was a lower price that did what? Kept driving price all the way to the downside. So every single day I wake up, just like here right now, this is the law of what? This candle. I just mark it. Every single day that you wake up, you do what? Find out the highs and the lows. Find out what the previous candle has done. Did it wick the low and close above, or did it close below the low, which is going to give you a potential of what? Lower price. This is basic core candlestick what? Anatomy, right? So because this candle closed below here, what am I doing again? I'm still expecting what? Lower price. It's as simple as ABCD. It's as simple as ABCD. Now because I'm expecting lower price, what do? I don't go to my 4 hours time frame, all right, because I prefer to treat the 4 hours CRT. I rarely trade the daily CRT, except I just feel like okay. So I now go to the lower time frame and do what? And look for 4-hour CRT in my direction, in the right direction. So you have daily bias in your favor, and now you are trading 4-hour CRTs in the direction of what the overall drawing liquidity of what? The daily bias. You can hardly get it wrong. You can hardly get it wrong. You can hardly get it wrong. Now let me show you how pattern traders get wrecked. Truly wrecked. They don't ever hear, they don't ever listen, and nonetheless they're the driving force of the liquidity that we need. Now they're going to come here, blindly mark, okay, this is the low right about here, and say okay, this is the high, and yeah, they say okay, this is CRT for me. Are they right? Yes, they are right, of course. But what's wrong here? Order flow is wrong, bias is wrong. You are trading a counter trending what? CRT. Do you trade it? No. If you want to, good and fine, but you do what? You risk less. But remember the phrase, the statement, the trend is always what? Your friend, and the trend is truly your friend. Okay, so this is how to solve what? Directional bias. Right now, if you have a good analysis and your direction is what? Wrong, it's not going to play out. No matter how beautiful your chart look, if your analysis is good and your direction is what? Is wrong, it's not going to what? Play out. Now let's look at a few examples of trading what? In the overall flow of what? The daily bias, using the daily bias, the overall flow, right? So trading for our CRTs in the daily bias direction. So what do we do here? I simply wake up because okay, I'm already expecting sell. Today I'm going to sell. Maybe I'm selling for the week, depending on how the weekly lows and the weekly highs have been what? Attacked. If the weekly lows were attacked and wicked above, right, closes above, I expect more higher price, at least to 50% of the candle range. So back to what I'm saying. Now, how do you now merge daily bias and what's key level? One important thing I need you to pay attention to is these three things I'm about to write down. You are familiar with it, you know it, but you just don't know how to use it, right? Number one is what? Your basic order block, right? Number two is what? Your basic breaker, right? OTE. Your basic breaker, OTE and OTE. And number three is what? Your average what? Fair value gap, FVGs. Most of the time when you are trading CRTs, and it does not seemingly go into your favor, or maybe it wicks you out before it delivers into the target, you are getting one of these things wrong. You are either getting your directional bias wrong, or you are not getting your key level rightly plotted out. You are not getting your key level rightly plotted out. A key level should contain either of these three things. Your key level should contain an order block that is fresh, unmitigated. The more fresh the order block is, the more and the higher the probability the order block has of holding. Do you understand? Of holding that particular zone or that particular point of interest. Likewise your breaker, and likewise your fair value gap. If an FVG has been raided multiple times, the potency of that FVG holding becomes slim. If an order block has been raided multiple times, the potency of that order block holding becomes slim. So I recommend, nonetheless, you cannot pattern it. You cannot say if it's, you're going to miss a whole lot of trade. Okay, so nonetheless, I commend that you pay attention to your order block, your breaker block, your OTEs, your FVGs, to make sure that they are what? Unmitigated. All right. So I'm going to give you a little example of the trade I took right here and how I used a key level right here to complement my CRT. Now backing on the daily time frame, right about here, this is where I all started from. So this was what? This was my daily high and what? My daily low. Remember I told you this was my daily low, right? Remember I said how the candle, how the highs and the lows, how the market reacts towards the highs and the lows of the daily candle matters a lot in terms of what getting your directional bias. Now I saw that okay, this candle came about this region, right, closed above here, And we have the Monday candle that opened up on 27th of October, wicked out the high, came back and closed below the high of what the previous candle, which was on Sunday weekend, right? So when I saw that happened, the first thing I made mention to make sure that, okay, I'm on the right track is there any complementing key level around here? And of course there is, right? Is there any complementing key level around here? The moment I notice, okay, yeah, there's a complementing key level around here, what do? I go to my checklist and be like, yes, check, there's a key level right here. Now this is an order block right here. Your order block has an FVG, right? You can just use the order block, it doesn't matter, right? It has an FVG right here. Let me now extend this line actually. Your order block also have what? A complementing inducement. I love this a lot. So when I see these three kind of things forming together, I'm glad. An order block that has a fair value gap, high probability. If it's just an order block, I still take it. If it's just a breaker, I still take it. But when I see more than two of these playing out at what's my key level, it becomes what? A higher probability trade for me to take. Does that make sense? Now, because of seeing this and saw that I had, okay, a complementing inducement around here that does what? Validate this order block. It also did what? Took away my checkbox. Now, number three was that I saw that the order block is unmitigated. Market had not traded into it afterwards. It's a reaction. The only attempt market did was this particular one, this particular candle here, which did not reach above it. So it is fresh, it's a virgin order block if I use that language, and it's what? Unmitigated. So when I saw that, I just needed markets to do what? To react. So that means what? This potential CRT right here is going to hold. Why? Because there's a key level complementing it. So all I needed to do was what? Come down to what? The lower time frame, mark out candle 3. Now, some of you get stuck, some of you get wrecked a lot of time because you are trading candle 2. We'll talk about that, just other series on how to trade candle 2 as the case may be, right? So this is candle 3 from right to this region. This is candle 3. Candle 3 is from this region, right? So what do I need to see? I need to see, first of all, so this model 1 right about here, right? So I needed markets to do what? To come and fill this FVG right here. Why? Because it's being complemented by this what? Breaker block. So I don't want to make the chart too messy, as the case may be. So yeah. So this is it. So this is your model 1 right about here. Your order block, shifting what? State in delivery, came back to do what? To retest the order block and boom, started tanking. Then you have candle 3 giving you what? A breaker, a continuation, OT continuation, to help you do what? Participate into the what? Distribution. So that's what you have around here. And you have what? Market mitigating into this breaker. I also have what? My Asian liquidity high complementing it, which makes it a very, very high probability for me. So Asian liquidity high was complementing it right about here, right? Asian high, I'm sorry, so Asian high, yeah, so complementing, which made it what? A very high probability for me. So I needed candle to do what? The first candle to bulge into it, to bulge through into it. After I did that, I needed the second candle to do what? Come and read it. After I read it, then close, and that was going to be what? My entry. My stop loss just right above this region, and that is how I was able to do what? Take all this 1 to 6 and still holding all the way to this particular region. So this is literally 1 to 15R, right? And I'm still holding actually because I still expect this. I expect this low to be destroyed, right? So averagely is 1 to 17. So everything is possible. Mixing your daily bias, and understanding the framework of what killer is going to make you invincible. So I hope you found value. Thank you and peace out.